Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Monday, the 11th of November. I'm Daniel Lam, your host for the podcast. It has been, indeed, a long week for us strategists. Now, following our last update, the Republicans are closing in to their clean sweep, which means that the case for the Trump trades have become stronger. U.S. equities enjoying the short-term benefits of likely tax cuts, while sectors like the U.S. financials doing well due to expectations of potential deregulation and the soft landing narrative. Now, we believe this environment is positive for U.S. risky assets for the rest of the year, especially when taking into account of the Fed meeting, where the Fed did not show any indication of the deviation from the Fed cutting path. So it cut by 25 basis points, and while not quite shutting the door on proactive monetary policy, Powell emphasized on the uncertainties of the economic responses to policy shifts from the Trump administration, and the multiple factors driving outcomes conveyed the sense that the FOMC would not readily change policy until the impact of potential fiscal actions were visible. Powell hinted that cuts may end up being slower than expected, but did not seem to be pointing to an immediate pause, which reassured markets. The fact that US 10-year government bond yield started high and ended near the day low on Thursday night, and then continued to come off mildly on Friday, suggests that perhaps we may have seen most of the rebound in yield. Now, we've seen the yield rebounding from 3.6% in the middle of September to 4.5%, i.e. it went up by 90 basis points, which is in line with the reaction of the Trump victory back in 2016. So we continue to advocate investors to be locking in the current yield levels. In the meantime, China announced a 6 trillion RMB local debt swap, and this was in line with market expectations. However, the markets were expecting more details, especially regarding real estate and consumption. So therefore, Hang Seng Index futures were down close to 2% overnight on Friday. Now, we believe short-term investors would be focusing their attention on US equities, while keeping an eye for the next catalyst in China, such as the Central Economic Work Conference in the middle of December. That is all from me for today. As always, if you enjoyed this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.